In 2026, England's economy is standing on a financial edge that most people don't even see. On the surface, Britain still looks strong. London's skyline shines. The pound still trades globally, and markets appear calm. But beneath that image, England is quietly fighting one of the most complex economic challenges in modern history. The story begins with disruption. Brexit reshaped England's trade system. The pandemic exploded government spending, and global conflicts pushed energy prices sky high. By 2026, these shocks have merged into one reality: higher costs, slower growth, and deep financial pressure on ordinary people. London remains one of the world's most powerful financial centers. Banks, hedge funds, and global investors still rely on England's markets. But competition is rising fast. Parts of Europe and Asia are pulling financial business away, forcing England to work harder to protect its dominance. Money still flows in, but confidence is no longer automatic. Inflation is one of the biggest concerns in 2026. Food, fuel, rent, and daily essentials cost far more than they did just a few years ago. While wages have increased slightly, real purchasing power has fallen. For millions, life feels more expensive, even when the economy claims to be stable. Government debt is another growing risk. England borrowed heavily during years of crisis, and now interest payments alone consume massive portions of the budget. Higher interest rates mean less room for spending on healthcare, education, and infrastructure. Every financial decision now comes with consequences. The housing market reveals the deepest divide. Property prices remain extremely high, especially in London. Investors benefit, but young people struggle to enter the market. Rising mortgage rates in 2026 have locked many families out of home ownership, turning housing into a symbol of economic inequality. England's economy depends heavily on services rather than manufacturing. While services generate strong GDP numbers, they are vulnerable to global shocks. To counter this, the government is investing in green energy, technology, and defense industries. But rebuilding real economic balance takes time. The pound sterling continues to face volatility. A weaker pound helps exports, but increases import costs, adding more pressure on inflation. The central bank walks a dangerous line between controlling prices and avoiding recession. Yet England is not collapsing. It still holds powerful advantages: global influence, strong institutions, world-class education, and fast-growing fintech and green finance sectors. The real issue is distribution: who benefits from growth and who pays the price. England's economy in 2026 is not about sudden disaster. It is about a slow financial transformation. Those who understand this shift will adapt. Those who ignore it may struggle. The real question isn't whether England will survive, but whether it can rebuild trust, balance, and stability in a changing global world.